China's industrial earnings rebound in June though headwinds remain. Beijing profits at China's industrial firms bounced back to growth in June after 2 months inside the crimson, underpinned with the aid of the resumption of activity in most important production hubs, but fears of a COVID-19 resurgence have solid a shadow over future manufacturing facility output. Profits in June grew 0.8% from a year in advance, rebounding from a 6.5% decline in May, National Bureau of Statistics (NBS) facts showed on Wednesday. Buoyed through easing pandemic curbs and government stimulus, June's information suggests commercial companies are progressively coming back from painful supply chain disruptions in the 2D zone. The healing in income increase was pushed by a pickup in call for, mentioned Zhou Maohua, an analyst at China Everbright OTC, CHFFF Bank, including it caused sturdy earnings boom inside the upstream area. Profitability inside the center and downstream production sectors, as well as manufacturers of electricity, heat, gas and water, additionally progressed, he mentioned. NBS senior statistician Zhu Hong said in an assertion that as the pandemic became successfully controlled and the industrial chain in addition recovered, commercial companies' efficiency stepped forward markedly. Profits of commercial corporations within the Covid-Yangtze River Delta region rose 4.6% in June following a 17.8% hunch in May. Profits of car producers jumped 47.7% as manufacturing resumed within the foremost auto production hubs of Shanghai and northeastern Jilin province, with the arena being the biggest driver of the income rebound among industrial corporations, Zhu mentioned. For instance, Tesla, Nasdaq, TSLA, finished its highest month-to-month output at its Shanghai plant in June because it opened in 2019. The earnings rebound turned into encouraging, however Zhu stated profit boom remained vulnerable and the outside environment turned into becoming greater complex and grim. While charges preserve rising, some corporations are going through trouble in manufacturing and operation as well as potential losses. China's economic system braked sharply inside the April-June area, highlighting the giant toll on interest from big lockdowns that hit home intake and agency self-assurance. Industrial corporations saw their blended profits upward push 1% to 4.27 trillion yuan, $631.1 billion, in January-June from the same duration a year earlier. That matched the 1.0% increase tempo inside the first 5 months, the records confirmed. Liabilities at business firms jumped 10.5% at end June, additionally ultimate similar to that as of end May. In June, China's commercial output grew 3.9% from a year earlier. Currently, risks of a COVID resurgence and the go-back of strict measures to stamp out infections throughout China pose demanding situations to manufacturing facility production and recuperation inside the international's second-large street economic system. The Chinese tech hub of Shenzhen told 100 most important groups together with iPhone maker Foxconn to installation, closed-loop, structures as it battles COVID-19, in step with a file attributed to the local authorities on Monday. Earlier this month, the port town of Tianjin, home to factories linked to Boeing (NYSE), BA, and Volkswagen (ETR, VOWG_P), and different regions tightened COVID restrictions to combat new outbreaks. Meanwhile, policymakers are scrambling to preclude other problems together with a debt disaster inside the property zone from spilling into the broader economy in a politically touchy 12 months. Analysts say the legitimate increase target of around 5% for this year can be difficult to achieve without removing Beijing's strict zero-COVID strategy. The industrial profit information covers large firms with annual sales of over 20 million yuan from their fundamental operations. $1 equals 6.7662 Chinese yuan.